Hello, everyone. Welcome to GTR US 2020 Virtual. We are joining you from various different locations today, and we hope to be able to meet you again in the US in 2021 when we're all able to travel around again. For now, welcome to GTR's Africa session of this US conference, where I will initially be opening up with a geopolitical risk overview and an economic outlook. And then I'll be introducing and opening up to my panel of experts based in South Africa and London today. My name is Robert Besseling. I'm the Executive Director at risk advisory company EXX Africa. We provide analysis and forecasts on political, economic, and security risk in all African countries. Now, I want to start, first of all, by looking at the impact of COVID-19 in Africa, and particularly the economic impact, which seems to be the more durable impact that the pandemic has had across the African continent. As you can see from the data here, Africa currently has a cumulative total of 1.6 million infections, of which only about 250,000 are actually active. The death rate in Africa has been much lower than various other parts of the world, including the US and Europe. Many African countries are seeing a death rate of about 2 or 3%. Now, of course, there is the prospect of a second wave of infections, which the WHO has already said could be more moderate than the second wave being experienced in other parts of the world. A few months ago, Africa's most industrialized economy, South Africa, had the vast majority of infections. And certainly good news for me and various other of my panelists at the moment is that those infections are actually steadily dropping in terms of their rate. And other parts of the continent, particularly in North Africa, are seeing a fast resurgence of the virus, potentially on the back of a similar pattern in nearby Europe. Morocco and Egypt, for example, are seeing some of the fastest spikes in COVID-19 and coronavirus infections. Now, that does not directly translate to the economic impact on many of these countries. Egypt, for example, is one of 3 countries in the entirety of Asia and the Middle East which will see economic growth this year. As you can see here, Egypt, of course, a key trade and investment partner of the US, should be achieving about 3.5% GDP economic growth in 2020, and consistently so for the 2 or 3 year outlook. It's good news as well for a number of other key US, Africa, and trade partners, particularly for economically diversified economies on the west and east side of Africa. Countries like Benin, Rwanda, Tanzania, Ethiopia, many of which where the Millennium Challenge Corporation or other US government entities are operational, and where we're seeing quite a bit of investment and trade activity from US companies, will achieve a moderate level of economic growth this year. And most of the countries listed here in terms of the best performing African economies are certainly important trade and investment partners for the US government and many of its companies. Conversely, we are seeing a economic contraction in Africa in 2020 for the first time in 25 years, according to the latest World Bank forecasts. And that is really being dragged down mostly by countries which are very much dependent on the tourism industry. Countries like Mauritius, Seychelles, Botswana, South Africa, Morocco are all seeing a dip in their foreign exchange and their economic growth levels. Of course, some of these countries, like Sudan and Zimbabwe, have US punitive measures imposed, so this does not really impact many US companies. What does this mean for the country risk outlook rather than the pure economic forecast for many of these countries? Now, at X-Africa, we have a quantitative and forward-looking risk scoring system. And you can see here that many of the countries which are seeing a severe economic contraction this year and for the foreseeable future are rated in that severe red category at the moment. And actually, at the moment, we are rating no African country in the low-risk blue category, which is different to the beginning of the year, where countries like Benin and Rwanda and Mauritius were rated in that blue. And we're hoping that a number of these countries will be able to move back into the moderate or low categories in early 2021. Now, in terms of the countries that are set to be most vulnerable or least resilient to the economic and country risk impact of the pandemic, many of these countries are already struggling states such as Somalia or Guinea-Bissau, which are racked by political instability and insecurity, as well as countries like Sudan and Zimbabwe, which were seeing hyperinflation and serious debt issues way before the pandemic started. Now, what is the impact of all of this on African trade? And how does it relate to our conversation in terms of US-African trade? Now, the COVID-19 pandemic has very much impacted trade across the African continent for three reasons. There's been a twin shock to global supply and demand. Global trade values have decreased over the past 3 quarters. And similarly, there have been multiple waves that have hit African economic activity. Firstly, from China in the beginning of 2020. Secondly, from many OECD countries, mostly from the European Union, but also from the US. And thirdly, from within Africa, as Africa experienced some of the most severe lockdowns of economic and social activity over the course of the second quarter of 2020. Now, obviously, this is important to mention because many African economies are highly commodity dependent. As I mentioned earlier, it's more economically diversified countries that are actually be more resilient to the economic impact of the pandemic. The countries that are more heavily focused on commodity trading, particularly those exporting to major economies like the US, the EU, and China, are seeing a real drop in their foreign exchange levels. And that leads me to my final key point I would like to mention here, that these foreign exchange drops are leading to serious concerns of defaults and sovereign defaults in a number of African countries, particularly those countries in Africa which already have a very high gross debt to GDP ratio. That includes, of course, countries like Sudan and Eritrea, which were already in arrears pre-pandemic, but it also includes countries like Mozambique, Angola, Zambia, and the Republic of Congo, all with more than 100% gross debt to GDP ratios, and all of them struggling to raise enough foreign exchange to service or repay their debt. At the moment, the only real solution on the table is a G20 and IMF and World Bank proposal, which is being implemented in a number of African countries to simply push back little more than $6.5 billion in debt interest payments from 2020 to 2021. And hopefully by the time you will hear this recording, you will see that the G20 has actually extended that into 2021 as well. In terms of the countries that will actually benefit from this, it's interesting to note that Angola will occupy the vast majority of the debt service suspension initiative proposed by the G20 and the World Bank and IMF. Other countries like Ethiopia and Kenya are also set to benefit if they were to apply. But a number of African countries are refusing to apply to this initiative because it will have an impact on their credit ratings. Africa currently needs, according to the IMF statements at the October meetings, $345 billion over the next 3 years to respond appropriately to the pandemic. So that is well above what we're actually seeing at the moment in terms of relief being offered on debt. And that's mostly because various countries, including the US and China, have rejected a blanket debt relief. And it's really the IMF and the World Bank that have stepped in the most across Africa and have been spending hundreds of millions or billions of dollars in a number of countries to help with the fight against the pandemic and to provide economic stimulus. It is in those countries where the IMF and the World Bank is most active at the moment that US companies may see a real opportunity to continue or to research their trade and investment patterns. I would like to, first of all, ask my panel to introduce themselves quickly mention their name and their company, and maybe mention the one thing they're most excited about in terms of African trade at the moment. I'm going to ask Linda to open up first, and then bring in Lodewijk, Landre, and Zaan in that order. So Linda, over to you, and then gentlemen, can please introduce yourselves.
Hi, I'm Linda Sadler. I'm representing Barak Fund. I'm based in Johannesburg at the moment and have been for the last 9 months, as like everyone else. So Barak is the largest private credit fund in Africa with an AUM of $1.3 billion. And our flagship fund is the Structured Trade Finance Fund. I think the thing that I'm most excited about, I mean, I think there's a lot of issues and a lot of challenges that we're currently facing, but I think, you know, as with all things, with challenges and with changes, there are opportunities. And, you know, with the change in banks' appetites and risk off, we getting a lot more opportunities. And I think, you know, this is also something that we can embrace. So, yeah. Thanks, Robert.
Thanks, Robert. Linda. My name is Lodewijk Meyer. I'm with Baker McKenzie, based here in Johannesburg. Baker McKenzie should be well known to you. We're a US-founded law firm out of Chicago who operate across the world in the context of Africa. We have offices here in Johannesburg, in Morocco, and in Egypt. I think it's a difficult question what excites me most. I think one could respond and say there's very little to be excited about at the moment because of all the doom and gloom. But I think the one thing that I am seeing for the first time, although it's been talked about for a very long time, is we're seeing real collaboration as between the various liquidity providers in the Africa trade finance story, if you like. So we're seeing an increase of the DFIs coming with funded participations into transactions, banks collaborating with insurance companies, collaborating with ECAs, DFIs, and also on the private debt side where Linda and them operate. So I think what the pandemic has done is it has created a need for collaboration, as every institution in the value chain as liquidity providers have a different risk profile, but if you put that risk profile in the right bucket, you could serve the opportunity quite well. So I think that's what I'm most excited about.
Hi, my name is Landre. I'm a co-founder of Orbit. And as you probably can tell, I'm taking this from my car because I've had to make an urgent trip down to Kent to my daughter's school. So I do apologize, but it's the nature of working from home. I'm trying to juggle many things at the same time. You know, Robert, you've pretty much, you know, provided a very good context in terms of what's going on around the continent, in terms of how the continent has, you know, been quite resilient to the pandemic itself. However, as you rightly indicated, the economic shock across the continent and across the various countries, it's a real issue that needs to be dealt with. And as Ludwig has said, especially around the trade finance, I think the most exciting thing that we've seen is the fact that the DFIs have been, you know, they've essentially stepped up to the challenge here. They've provided liquidity across board, both at the country level and at the fund level. So through our platform, and I'm sure that's a bit, we've seen quite an increased amount of capital available for, you know, providing funding to the continent. And I think, you know, this would be interesting how this pans out over the next couple of months into next year. But it's actually very sweet, the various asset classes.
Rob, thank you for the opportunity. Thanks, Landre. My name is Zaan Meyer. I head up the global commodity finance team for Nedbank Corporate and Investment Banking based in Johannesburg here in South Africa. We're one of the large 4 commercial banks operating out of the southern tip of the continent. And our remit is basically sub-Saharan Africa. I focus on agricultural commodities. And I think if I have to say what excites me most is maybe 2 things, is that we were very surprised coming out of COVID, and I say that with maybe a bit of a tongue in cheek, that the banking systems, especially the tier 1 banks in both South Africa and in Nigeria, were incredibly resilient in terms of capital preservation. We're coming out of this, yes, we hurt, but we obviously see that there's light at the end of the tunnel. And I think maybe the other one is the resilience of African agriculture. In terms of COVID and the lockdown, you mentioned that Southern Africa had severe lockdown measures. Despite that, agriculture was essential services, I think, like most of the global situation, and commodities flowed. Despite some logistical challenges, I'm excited to say that I think, especially on the sub-Saharan Africa portfolio in terms of agriculture, these industries are looking up. They've done amazingly well through this crisis, and that excites me going forward. We've got a reboot out of COVID in 2021. It's unavoidable, and there's still plenty of opportunities out there. Thank you, Rob.
Thank you very much, everyone. Now that we've set the scene and introduced the panel, I think I'm keen to rejoin Landray in his carpool karaoke over there on the road to Kent. Landray, you are in the business of origination. So obviously you're seeing deals as they're being done, as they're being proposed. What deals are you seeing at the moment in terms of activity from US companies and their interest in Africa? Can you fill us in a bit more detail there?
No, thanks, Rob. And yeah, it's a good point to raise. And actually, I think I'm going to tee off from Zane's point, right? Where we've seen the most activity, both in terms of demand and supply of capital, has been in the agri space. For some have seen our recent announcement in terms of transactions being completed through the platform. As relates to the US firms, I mean, I dare to say that, we do not see quite a lot of US funds participating directly in the market. I'm sure there will be very interesting conversations around this throughout the conference. We do see a lot of, bilateral trade from a government to government level happening across the continent with the US aid and some additional, capital coming out of the US, but not at a sort of a non-bank funding level, or even the US banks participating in the trade finance space in Africa. And I'm sure, probably Zane or Ludwig would probably have a broader perspective on that as well.
Thank you very much, Landray. Potentially as a quick follow-up to that, are there any particular sectors, we've talked a bit about agriculture, are there any particular sectors which you are seeing particular activity in general, not just from US trade partners and investors? Where are you seeing most of this activity happening on the African continent?
No, great question. I think, one of the things that we've seen is definitely a lot of reconfiguration of supply chains across the continent. So prior to the crisis, one of the things that, the sectors that we are definitely on the rise were sort of a lot of activity in the mining sector in terms of commodities in and out of the continent. Agriculture was definitely remains a key part of the trade finance ecosystem in the continent. Manufacturing was also on the rise, but now with the post-pandemic, sort of the demand has been more, agriculture is shot to the top. We've seen quite a lot of activity around healthcare, commodities, healthcare consumables being imported into the continent. And obviously that's also spilled into the manufacturing of healthcare equipment across the continent. FMCG has remained strong in terms of fast-moving consumer goods. So the demand for that, both around the supply of capital to that space and corporates seeking additional funding to continue to provide consumer goods into various markets across the continent has remained strong. Particularly, you then look at, if you're going to zoom in a little bit more and you look at East Africa, East Africa actually has been quite resilient and has performed quite incredibly well throughout this crisis, particularly in countries like Kenya and Tanzania, where there's been steady export of commodities out of the continent, and that has not dimmed or reduced in our view. So those sectors remain resilient. And the same goes for in West Africa when you look at the cocoa industry, and you look at some of the all the grains that have been exported out of West Africa, that's remained strong. The mining space has obviously taken a hit, especially in terms of commodities. I'm sure we can get more into that, but so far I think agri, healthcare, and manufacturing have been the top three sectors that we've seen transactions across our platform.
Agri, healthcare, and Landray was the third one you mentioned?
Manufacturing.
Very interesting. Excellent. Landre, thank you so much for your comments. And actually, Lodewijk, I think maybe before we move on to a conversation in terms of risk mitigation, I'm quite keen to have your thoughts and see if you agree with Landre and maybe some of the points I was making earlier in terms of which sectors are doing well right now or can really potentially recover faster than others. And you mentioned that Baker & McKenzie has a number of offices across the continent. So it will be interesting to hear from a more regional perspective where you are seeing some more activity. Is it in North Africa? Is it in Southern Africa? Is it in the East? So over to you.
Thanks, Rob. So from what we're seeing coming in from the Joburg office, from across the network, I think Landre is right. There's quite a bit going on in the manufacturing industry. We are looking to advise on a number of, we are advising on a number of restructurings. There's been some opportunities in the M&A space. I have been recently involved in a very interesting agri transaction out of the States where a major US agricultural trader and importer stroke exporter has entered into a JV operation with a business in South Africa for the export of avocados. I'm not sure whether it's produced or pronounced in the same manner in the States, but it's a sizable investment. Energy is picking up in a big way. So there's a lot of work starting to happen again, especially in the renewable energy space. Obviously, Mozambique, oil and gas, massive. Landre mentioned, agricultural commodities, West Africa, it's been active throughout COVID. And then interestingly is, some of the merchants and traders have really kept business going and supply chains going, as Zon was mentioning, during COVID. And it was interesting for me to see how easily they switched from essential to your day-to-day. Because those supply chains, I guess, are all interlinked. I think from a regulatory perspective, what is some interesting work that we've been busy with is you mentioned the demand for dollars in some of the markets. I've been involved in some really sizable derivative type in transactions, quite complex ones with African central banks and with governments where they've swapped out some of their foreign currency risk with syndicates of commercial banks, of DFIs. So, and I think Landre also mentioned it as noteworthy, is how the DFIs have stepped up. Of all the institutions that we work for, I would say that the DFI space, and I'm not speaking about projects, that's for a different conversation, purely on trade and specifically on agricultural trade, there's a lot of investment going into new product development, de-risking techniques, and bringing liquidity to the end user, if you like. So in the context of agriculture, a real need to bring the liquidity to the farmer, and using those different channels like the local banks, merchants, traders, exporters, importers, regional commercial banks as conduits for that supply. And linking into my earlier comment about what excites me most, I think is that brings room for collaboration. And it's, in the past, for me, the conversation was always about yield seeking. I think the conversation has moved on towards structuring for risk, but also obviously to earn a decent yield. And yeah, I would say that's where that gives you a little bit of color from what we see.
No longer just looking at yields. Interesting. Lodewijk, many US companies remain very risk averse in this particular climate, even pre-pandemic. And Africa in general is a continent where the US is trying to compete with many others out there. And very often it's a aversion to risk, which make sure that deals go to longer established European partners or to China or other Asian entities. Is Africa as scary as it is made out to be, in terms of, you know, the news headlines are always talking about unrest and political instability? Is it as scary as it is made out to be? And what can be applied from a legal perspective in terms of implementing regulations, and potentially also bringing in, you know, the conversation about KYC processes to understanding your counterparties in Africa? So what can be done to try and reduce that image of risk and concern, scariness around Africa?
Well, I'm not sure the lawyers are going to be able to help you, or the or the regulators. I think from my own experience, the first thing I want to say is, you know, that please, you know, recognize that Africa consists of many jurisdictions. And, you know, doing business in Africa is not about the legal regime or the regulatory framework, or frankly, sometimes the lack of regulatory framework. It's, in my experience, it's all about having partnerships, boots on the ground, working with people that have experience in doing deals in Africa. If we're talking, you know, and before I get onto that point, and also recognizing that, you know, doing work in Nigeria is completely different from doing work in Kenya. It's totally different from working in Ghana, and that goes for every country. So first, also recognize that, you know, there's principally 5, possibly, well, actually 6 legal systems in operation across the continent, as a legacy really of colonialism and the influence of the past. And we have the Roman Dutch system, which is predominantly in South Africa, Botswana, Namibia, and small countries like Lesotho and Swaziland, or Eswatini as it is now called. You have the Francophone countries, or your main French-speaking countries, where the law is based on the French system. You have your English-speaking countries, which is based on the Anglophone or the English legal system. Then you have the Lusophone countries, which are based on the Portuguese legal system, like Angola and Mozambique, Burkina Faso, and then Liberia follows the American system. So the only country in Africa that does that. But I think talking about trade finance, I think the important thing is that you got to recognize that trade finance is all about the movement of goods and services, the processing of it, the storage of it. So you end up on a trade financing transaction to operate in multiple jurisdictions. Trade finance, if structured correctly and properly, is a self-liquidating asset class. So the most important thing when advising on trade finance transactions is to understand the legal principles that applies in a particular country where those particular assets find themselves at the point in the finance chain, so that the financier can access it. Because at the end,
I'm keen on that point of trade finance and the different types of financing. I'm keen to bring in at this point of the conversation also, on the back of what you were saying, Linda and Zahn, who've been patiently waiting to bring in their contributions. And maybe Linda, starting with you, we were talking about, you know, regional diversity, risk outlook, and particularly about sectors potentially doing well, opportunities out there. How much unmet trade finance demand is actually out there from your perspective at Barrick?
Yeah, I mean, Ludovic said something interesting. He said he's seen a lot of support from the DFIs. From where we sit as an alternative credit provider, what we've experienced is that the DFIs are supporting their current clients and focus on restructurings and assistance and additional support of their current clients, as well as regulated financial institutions. But then where the conundrum is that we're seeing the opportunities is that the financial institutions and the banks are actually on a risk-off basis. Zan, you can give your input there, but what we've seen is that banks are completely risk-off, but they're getting the liquidity from the DFIs, and there's a massive gap. That also coupled with some of the instances of fraud in the industry. There's a lot of risk-off in terms of the asset class in itself. As well as then risk off in terms of, just COVID and supporting and pulling in. So from our point of view, we're seeing a lot of opportunity across the sectors. So across the board, including mining. I mean, our current clients need additional support. And then the conundrum that we also facing is that our investors are European or, internationally global US institutions, and in these kind of pandemics and economic situations when it is also risk off, they want to retract cash. So we see a massive demand for liquidity across all sectors, and just less supply across the board. I mean, that's what we're really seeing. Zan, so I don't know if you're on a Nedbank is on a risk off basis, or I don't know what your internal view is.
Yeah, Linda, I think thanks for the intro. You're 100% right. And just to maybe sketch the picture, I think in 2019 we were looking up towards the gap being met. Since 2011, for the last, let's say, 8 or 9 years, the average trade finance gap was $120 billion on the African continent. And then in 2019, the AfriExim saw it as being 81 billion. So generally, we thought this was looking up. But unfortunately, that didn't happen. COVID did a lot of changes, and obviously it exacerbated the whole issue in terms of this gap. So just to set the picture, I mean, Africa's share of global trade is 3%, and in the last 5 years it was up to 4.4%. So it's actually declining. But you're 100% right. Liquidity is getting less. You mentioned the frauds. There were a number of them out of Dubai and Singapore, and then that obviously scared a lot of the European banks who decided to go back home, maybe flight to safety. ABN AMRO, BNP Paribas, just two of them. So that obviously also left a liquidity gap. Now, do we need to see, or can we see that as opportunity for African banks? I think most definitely. We can be closer to our clients, and I hope that once the flight restrictions are lifted, that's how we operate, is to actually be close to our clients and do due diligence, understand. And Ludovic mentioned KYC. To actually then go and say, look, it's risk off at the moment for a number of reasons, but there has to be a reboot, as I previously mentioned. So I think from that perspective, yes, regulatory issues is an issue. The old saying goes, Africa seems scary from afar, but when you're on the ground, it's far from scary. And I think we need to just embrace that and make sure we understand our clients and try and meet that gap. The sad thing is that African trade is massively underserved by banks, Linda, and you know this. We banks actually particularly and generally intermediate about 40% of African trade. The global average is 80%, so it's double. And if we say African bank intermediate trade is 1 trillion, and banks only do 417 billion of that. So massive unmet demand, Robert. And to answer your question, how do we close this gap? And I think DFIs will play a massive role going forward if they channel those funds correctly.
Thank you very much for that, Linda and Zan. Well, we've just seen at the October meetings of the Bretton Woods institutions, the major DFIs and MFIs are not all on the same page in terms of how to move forward. The IMF is calling for the World Bank to issue more grants. IMF shareholders are not all on board on the debt service suspension initiative. So potentially, if the DFIs are not all on the same page at the moment, what advice could you give to many American companies listening in today? in terms of how that demand can be met outside of the DFI space? Is there potential for more collaboration between banks and trade funds like Barracks, for example?
Can I start? I mean, I think like we feel that we're a brilliant platform for really to get money to the people that need it and that build the true economies of these countries. What we've also seen is that the DFIs, and especially the African DFIs, have given a lot of money, and they'll for COVID relief and whatnot, but it ended up at the governments and commercial institutions, and it doesn't necessarily go to the real economy, or doesn't filter down to the SMEs and the mid corporates that are really struggling and need that financing. So I mean, we have that network and in touch with these clients and our current clients who need additional cash. So I think, in terms of really getting support to the economies, it's through alternative financiers, and Barak being the largest and one of them, and there are a few that really have the access to SMEs.
Zan, what are your feedback on my question earlier and Linda's response?
Yeah, Rob, I think Linda is right in a number of spaces and a number of comments she made. I mean, keeping trade and goods flowing, it's not only economic, it's also a social imperative to millions of people in Africa. So the tip and the trick that I can try and share with potential African investors is don't try and do it alone. We've been here for decades, and we know the ropes, and we know who to deal with, and we know who not to talk to. And I think if there's partnerships to be forged, it will be with people who operate on the continent already. And I think there's massive opportunities here. And I just mentioned the gap. There's $81 billion here of unmet financing needs that could be met with well-structured deals with parties that are credit worthy, and that you can actually trust to follow the trade flow and actually do exactly that social imperative of getting food, agriculture, food security to the people of Africa.
Thank you very much. I think you mentioned 81 billion there as being the trade finance gap at the moment. There's still quite a bit of competition out there for the opportunities that are floating about in Africa. And the US has been struggling to compete with Asian and European and other companies, the financiers, etc. And there's been a bit of perception as well that perhaps the US has lost its competitive edge in Africa. So maybe, bringing back Linda and Lodewijk here and please, jump in whenever you like. Is this perception right? Is the US losing out on too many opportunities because they are more risk off, or of a lack of understanding of misperception of the African continent? How does the US regain its competitive edge if it has indeed lost it?
I mean, the US is not as active as I think what it could be. And I think that's the basis of risk versus return, and it's a perception of risk. As Lodewijk has mentioned, you don't look at Africa as one whole big conglomerate. It's diverse, and at the end of the day, it's partnering with the right people and knowing the intricacies of each country and the perceived risk. So I think there's this massive risk perception, and then we're investment to Africa gets compared to junk bonds in the US, or certain asset classes that are much riskier, but because it's closer to home for Americans, it's safer than say African investments. And I think there's definitely a risk perception and an education that needs to take place in order to really understand the risk and know the right people on the ground.
Thank you, Linda. Lodewijk, I saw you nodding your head there. Go ahead.
Yeah, no, sorry, I think that's right. I mean, we've got to say, though, that, it's not as if the US is not that, is inactive on the continent. I mean, you have banks like Citibank that probably, the biggest foreign bank on the continent when it comes to remittances and dollar clearing. There's a lot of investment in education from the US. I've personally worked with some of the US universities who have invested heavily in education and frankly also then in healthcare. So talking about trade and commodity finance, I think where I think the issue lies is that the Asian investors and European investors have got sovereign support when there's a need for infrastructure development in the context of Africa. So Zahn mentioned the issues around regulations. Trade, unfortunately for banks, attract quite expensive regulatory capital. And what we're seeing is that through collaboration, as I mentioned it earlier, if a bank can de-risk a position against, for instance, an ECA in the UK, like a UKEF, that can, so the bank risk is on the UK exporter who supports the project in Tanzania for the building of a railway, that enables the movement of goods and services. So, and I know that's a story that Barak has also had great success in, is that, you know, how do you mix the infrastructure funding requirements with trade finance? Because I think trade finance is dependent, the two are interdependent. And maybe that's the part from a trade finance perspective where we're not seeing the US being as active as other parts of the world in investing in Africa.
Yeah, I think, Rob, from my side, I tend to agree with Ludovic. We see a lot of American companies coming into Africa, and fertilizer suppliers, herbicides, insecticides. John Deere is a name that comes to mind. Yeah. So it's definitely not that they're hands off here. They see the opportunity of massive tracts of arable land that could be cultivated here. Africa is notably marked as the next food basket, and American companies see that. We see them come in and talk to us. Although I must say that I think the regulatory changes and things that happen, and Ludovic spoke to it about earlier, it actually does scare off, I think, some of the American investors and banks. A recent survey that was done by AfriExim Bank listed 15% of the banks that got interviewed, saying that their main constraint to expanding trade finance on the African continent is changes in regulatory and KYC and AML and all those kind of things. And 15% is a big number, So I think from that perspective, if we can change that, and Ludovic did a great job of explaining that there's 49 countries on the African continent, So you need to see this not in isolation. You need to see this as a per country, per legal system. And obviously the counterparty that you deal with also crucial.
So, Robert, just quickly, the Africa Free Trade Agreement that's currently on hold, but there has been some progress. And I think if we can ink that transaction as amongst all the African participants in that deal, it would mean so much for the concerns that Zahn raised from the American investor community, because that would really level the playing field and make it much easier to do business across the borders within the countries, within at least sub-Saharan Africa, that is.
Ludovic, I'm really happy that you mentioned the aptly named AFCFTA. Just for our American audience, the African Continental Free Trade Agreement, which was due to be implemented in the middle of 2020. And implementation is now due to start at the beginning of 2021, and hopefully will incorporate many of the sectors, agriculture, manufacturing, that we've been talking about during this session. It is on hold at the moment. It could create the world's largest free trade union. So a huge perspective here, or opportunity here, to boost that relatively small intra-regional trade aspect, a problem that we're seeing in Africa. Linda, Zahn, on Ludovic's point, which I'm very glad you brought up, Ludovic, if this goes ahead, let's not speculate whether or not it will go ahead according to time. What opportunity do you see here? And do you see a potential for US trade with Africa to be boosted also if intra-regional trade within Africa gets a boost from the AFCFTA?
Linda, you want to give a best? Ladies first?
Yeah, I mean, I think, the challenge here, or with intra-Africa trade, is logistics and the ability to move product, regardless of what it is. I mean, so I think the biggest opportunity comes in not necessarily with trade, but with infrastructure development. Whether it's rail, road, cold chains, the logistical and infrastructure opportunity is it's a challenge, but that's where I think the US could also definitely have a part to play in the agreements or in the opportunity.
Yeah, Rob, I couldn't agree more. I was thinking about borders and just the actual huge issues for especially cold goods, standing for weeks at borders trying to get border clearance. That is things that leads to a third of South Africa's agricultural or Africa's agricultural produce going to waste. And if we can just solve that one problem, that one supply chain problem, with American technology, with Americans coming in here, playing with us on this level playing field, I think the opportunities are massive. You suddenly lengthen a supply chain and you smooth the supply chain to the extent that you don't have, days on end of trucks standing at border posts, goods going to waste, and actually losing quality and quantity. So I think from that perspective, Linda, I agree with you 100%, Linda.
Thank you very much. Yeah, I mean, this is obviously one of those key issues which is raising optimism about African trade. Another one that I briefly wanted to mention is the excitement about young, urbanized, tech-savvy populations across the African continent. So, maybe in the context of that free trade agreement, maybe in the context of some of the potential boost in agriculture, manufacturing, etc., are you guys excited about the young, tech-savvy population? Does it lead to more KYC issues? Does it actually give a boost to intra-regional trade? Back over maybe to Lodewijk and Linda first, back to Zaan afterwards, to see what you think about this particular hype around.
I think it's amazing. I mean, I can't remember the company's name, but I mean, there was a $200 million acquisition of a Nigerian startup that was developed in the heart of Lagos, which is completely tech-based by Microsoft, if I remember correctly. It was on the wires this week. I think one thing that will never let Africa down is the ability to innovate. And with the population that we have, Africa has a young population. There is innovation happening on the continent that just blows your mind. And whether it is innovation in the legal industry, whether it is in the mobile technology sector, it is just huge. It's screaming for liquidity. And I think there is huge opportunity in the startup space. And I think one needs to applaud institutions like the World Bank and the IFC, the Bill Gates Foundation, etc., who are seeding capital into a lot of these initiatives. So Rob, nothing legal about it. It's just plain exciting.
Yeah, I think the excitement is global. I think with the tech, it becomes, the world does become one, and we're able to create efficiencies, and certainly even with trade. I mean, whether it's tech regarding logistics or tech regarding connecting buyers and sellers. I mean, there is massive opportunity. So I mean, I think it is a very exciting space, and it's interesting to see what the future holds in terms of intra-Africa trade and how these new technologies and apps and blockchain all impact and improve the efficiencies on their continent.
Yeah, I think from our side, we actually as Nedbank recently invested and made an equity injection into a company that does citrus surveys and surveys for tree orchards with drones, and then counting those trees with technology that uses the red edge normalized digitized photography. So I mean that's exciting stuff, and also I think one can't neglect the technology that's already been out there for years. M-Pesa in East Africa, for instance, is working very well, and some of the larger traders and input suppliers have already used And they are using very successfully cell phone technology to share skills, transfer skills in terms of planting, cultivation, fertilizer application, and then also, as Linda said, opening up markets for these millions of small-scale farmers on the African continent. It's all good about telling the African continent how to grow the crops, but if you can't create a market and create transparency in that market, then it's of no use. So definitely, I think technology is going to play a massive role going forward.
Thank you all. I completely agree with you. I mean, during the pandemic alone, the shift towards digitization, the shift towards drones, the shift on entrepreneurial spirit, particularly in some of the big cities like Lagos and Nairobi across the continent, has been inspiring. We started our session talking about the risks and some of the countries that are facing really heavy economic impacts from the pandemic. And some of them already beforehand. But throughout our conversation, we've tried to steer away from the doom and gloom and very much focused on the opportunities moving towards next year potentially, and see how trade can recover, what more the DFIs can do to assist Linda and Zahn in their financing of meeting that unmet trade gap. And Lodewijk has brought some very important suggested in terms of trying to de-risk, trying to mitigate some of the challenges out there. Rather than asking you to again give you formal closing remarks, maybe just going to throw out one question to you. For our US audience, can you name one country in Africa where you right now are really excited about, particularly in terms of a US engagement? In any particular sector or any particular reason why? So any particular country that stands out that you could recommend to our US listeners today in Africa that they should definitely take a look at. Linda, I see you're thinking, so I'm going to pick you first.
I mean, I think the countries I would think of, I mean, especially maybe in the tech space, would be Rwanda. That would be something that would be in terms of tech and development and being the Singapore of Africa. I think that would be definitely worthwhile looking at. And I also think South Africa has got a lot to offer. I mean, in terms of our political, I mean, we have many challenges, and then I think our political landscape is interesting, and I think there are just a lot of opportunities, although obviously challenges across the globe. But I think, my two I'd recommend is Rwanda and South Africa.
Thank you. Zahn, Lodewijk?
So Rob, if Linda had 2 countries, can I have 3? So I think the World Bank agrees with me that growth in East Africa is well, the East African countries is going to be part of the very few countries that's going to actually show growth in the next 2 to 3 years. And if I can choose 3 of them, it's Kenya, Tanzania, and Uganda. We've seen amazing activity on the agricultural front there, amazing political will from the governments there to boost agricultural development, to commercialize some of the agricultural industries and initiatives there. So certainly from an investment perspective, in the agricultural space, I would say East Africa and those 3 countries.
So we've got 4 votes for East Africa and 1 for Southern Africa. Lodewijk, are you going to balance it out a bit?
Yeah, I'm going to be very boring, and I'm going to go rebounding South Africa. I think that's going to be the springboard for a US investor who's looking to dip his toe onto the continent. It's got a lot going for it at the moment. I agree with Linda that the political situation is not ideal, but I do see some green shoots, and I believe that South Africa is a fantastic springboard into the rest of sub-Saharan Africa.
Thank you. We are all sitting in South Africa today, I believe. So it's really good to hear that at least South Africa has already got 2 votes. And actually, I'm going, if I can join in on this one, I'm going to quickly throw out one vote for South Africa as well. There's some real momentum here on cracking down on legacy corruption. There's a real momentum now on economic recovery programs with more power in the presidency to try and actually implement this. Potential privatizations coming up. So yeah, certainly. And just to give a kind of an equilibrium to the other side of the continent, maybe 1 vote going from me me to Benin, tiny little country in West Africa, wedged there between the next to Nigeria. Lots of US interests, and it's an economic diversity that I was talking about earlier. It can really show Benin, for example, still achieving a 2% growth, while neighboring Nigeria will see a contraction of between 8 and 9% this year in terms of that lack of economic diversification. So I'd like to thank you all for your contributions today, and I'm sure you'll be able to reach out directly to Linda, Zaan, Lodewijk, or Landray after this presentation through GTR. I'd like to thank you all. I'd like to thank GTR for hosting us virtually this year, and I'd like to thank you all for your attention. Thank you again. Bye-bye now.